Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So in today's weekly report, we, as usual, taking a look at the fundamental background, and currently, well, some signs point on the possible relief on the United States dollar. So I mean, relief in its strength. So it could be some retracement against the United States dollar. And as a lot of analysis tells about this, the major reasons for that is two significant liquidity injections by the Fed from the one side, and the second is really bad statistics of the United States. So a combination of these two factors tells that, well, investors start to think that dollar is overvalued a bit, especially on the background, some overall pandemic relief, and that's on the news and headlines on the back to life in Europe and other countries, and all this stuff supports the idea of the possible retracement. At the same time, some fundamental factors tells that probably will be a temporal moment, because this equilibrium, this background is fragile, and as soon as the situation become worse, and if really some worse data will be released, and investors and markets will see that situation stands too far from the normal conditions, well, that again should support demand for United States dollar. So that's why we think, and we agree with the Rabobank analysis. They tell that, well, in the current situation, maybe some background exists for relief in United States dollar rally, but we think that it's too early to deny the long-term bull trend of the United States dollar, and we think the same. So it means that on the euro, it could be visible and solid retracement, not only on the daily chart, but maybe it will be visible on the monthly, on the weekly chart, because on the monthly, for example, we have the second grabber in a row, which suggests the upward retracement. Well, but we still keep our long-term bullish view United States dollar, because, well, the first negative surprise could come as soon as Friday, because non-farm payroll is expected to be at the negative area, with the 20 millions of the minus 20 millions of the jobs. So this outstanding number, that's the numbers that shows the raters poll. And if indeed these numbers will be as worse as they are expected, that could be the stunning information, that could be stunning data for the markets, and it's easy, could return back demand for the United States dollar. And who knows how much of the surprises of the same kind stands in the future. So it's lots of events. It says the gross domestic product release for the second quarter, which will be a decisive moment. Well, because it currently seems that the numbers that we saw on Wednesday on the United States gross domestic product, minus approximately 5%, it consists of the two months of the good performance in January and February, and minus 20% in March. So it means that in the following 3 months, April, May, and June, this will be significant negative numbers, and that's why it's one of the reasons that why we think that it's too early to suggest that the long-term bull trend on the dollar is over. So that's what about the long-term. In the shorter term, on the background of the coming relief and well, improvement of the sentiment, some technical moments that we have, we considered the possible taking a long position. Actually, through the previous week, we already was watching how situation was changing from the just minor bullish signs in the beginning of the week to the final changing of the sentiment close to the Friday. And we recognized here right at this moment. But this upward action has happened. We said, well, it's not typical for the market, and be prepared for a possible action. Do not take the short position. You see what has happened. Now, on the daily chart, what we have, first of all, our downside pattern has been erased, because market has created a new top. That erases the C point, and it means that ABCD is not valid anymore. Instead of that, we're watching for this ABC bottom pattern. Market right now stands at the resistance. This is 109.90 approximately. So also COP stands very close to 1043. That mostly has been here, just a few pips, hasn't been reached. Well, and overall task for us is not really complicated because we have the monthly grabber. Actually, this action is the monthly grabber. And our task is relatively easy. So we need to get some pullback to consider possible taking a long position in the upward continuation based on momentum, based on the trend that we have. That's all that we need to do. On the 4-hour time frame chart, we have local setup here with our hand and shoulders. As we said on Friday, OP probably should be hit, and indeed that has happened. And you can see right to the OP we have the acceleration. This is a good sign. It means that after the summer retracement, market is ready to go to the XOP. Although we have far more extended targets on the daily, on the monthly charts, still on the 4-hour time frame chart, the next target stands at 1080 approximately that we will consider. For a position taken, as market is not at overbought and it's just a fib level, I would suggest that we need to consider two levels, 109.47 and the confidence around 109 area. Again, as the last time, it would be better to split position for entry, to apply the scale in, so taking some part of the position right here, maybe the half of your position, and next half, if market will drop still to the confidence, take the rest right here. This level is also important because it coincides with the former neckline of the hand and shoulders. Both stops should be below the neckline, below the confidence support. So that's our trading plan for a coming week. As you can see, it's very easy. And let's see how the situation will develop on the euro with this retracement.